It's all about the M, stupid. I'm talking about the multiple, or more accurately, the price to earnings multiple, and what it tells you about a stock and where it's going. In How to Make Money in Any Market, I spent a huge amount of time explaining how the multiple works, because it's the M, shorthand for price to earnings multiple, that actually determines the price of a stock. This is something that really just confounds many people, even the young hires I taught at Goldman Sachs so many years ago. The M is basically the secret sauce of the stock price. Sometimes it's delicious, sometimes it's disgusting, sometimes it's pure poison. That's what I see happening to the enterprise software stocks right now. This is an industry where clients pay you per user, which was a great business model back when their clients had lots of employees. Now, though, the declines in these enterprise software stocks that do software as a service, brought forth by sellers concerned about AI replacing employees that clients pay for, are downright staggering. It's an Armageddon situation, and it all starts with a guest on the show last night, Bill McDermott, the CEO of ServiceNow. First, let me just say that ServiceNow is a tremendous company with a highly respected CEO. You bring in ServiceNow to rationalize and digitize your company. Most companies have all these back office silos, HR, IT, finance, that create a lot of bottlenecks without generating any revenue. ServiceNow automates the mess, and now they can bring in artificial intelligence to make things even more efficient. They can introduce agentics to help your company automate workflows. They have a view of the entire organization, and with a recent excellent acquisition, can even provide a layer of cybersecurity that many people think is very good. Best of all, ServiceNow knows what your entire enterprise needs. I know dozens of their clients. I've never heard anything but praise. However, this stock has become a nightmare. Down more than 50% over the last 12 months, including a nearly 10% beating today in response to last night's quarter, even though, again, the actual numbers were excellent. So what the heck's going on here? The earnings are fine. The problem is the M, what people will pay for those earnings. ServiceNow's multiple is shrinking. The M is being compressed, and it doesn't seem to matter what Bill does or says. He can order up a huge buyback, as he did last night. He can break records when it comes to how fast his very lucrative business has grown. He can show that ServiceNow's core business isn't being cannibalized by its AI component at all. Business is better than ever. But the market just doesn't believe him about the future, about the forecast. The market's saying his company's going to hit a wall, that AI will ultimately sap all of its profitability as clients learn to do more with fewer users. That's an existential threat for ServiceNow because they do charge by the seat. How do we know this? Well, we look at the price to earnings multiple. At the end of 2024, ServiceNow traded 65 times forward earnings. In April of last year, it traded down to 42 times earnings. After today's meltdown, it now trades at just under 28 times earnings. And it looks like to me that it's headed lower still. The shrinkage may not be over. In other words, like Ralphie from The Sopranos, ServiceNow has always been a good earner. But Wall Street's saying the good days will come to an end, and the growth cannot be counted on any longer. It's saying the same thing, by the way, about Salesforce, another software company that's doing fabulously, with a stock that's also seeing multiple compression. So the question isn't whether ServiceNow will keep delivering earnings. I think it will. Doesn't matter. Last night when I was interviewing Bill, he was emphatic about the client wins, the incredible growth of buyback. It out of the corner of my eye when I was interviewing him. I just saw the stock being hammered mercilessly. And I said, I guess what he says doesn't matter. It was all going down before he even went on a conference call. The M can be brutal. It's like a vote, a referendum. And somehow Bill has been voted off the island. The stock market has said, ain't got nothing for you, Bill. Personally, if I were running a company, I would hire ServiceNow and Salesforce too. They're really great. But I accept the market's judgment, at least for now, because I can't fight. It's too powerful. And it doesn't matter what Bill does or says. It doesn't matter what Mark Benioff says at Salesforce. These stocks are going to trade like they're no longer growth names, even as their growth remains strong. Can the market be wrong? Of course. It's wrong all the time. Can you get in front of a freight train that is the shrinking price to earnings multiple? Maybe not now, not yet. Soon, when we see how low the multiple can go, and it will bottom, these may be worth buying because we're dealing with great companies. Right now, that doesn't seem to matter. But I bet it won't stay like that forever. Terrific companies have a way of bouncing back, but not until their multiples bottom and start to turn around. I like to say there's always a bull market somewhere. I promise I'll find it just for you right here on Mad Money. I'm Jim Cramer. See you tomorrow.
Don't miss a second of Mad Money. Follow at Jim Cramer on X. Have a question? Tweet Cramer. Hashtag Mad Mentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.